The window is open. Not a window of weeks or months, but a defined, measurable, critical window where every signal from Iraq's banking sector is intensifying. If you have been watching the dinar for any length of time, you know that this moment has been building for years. But this week, the signals are no longer subtle. They are no longer background noise. They are flashing red, and the markets are starting to pay attention. Let me start with the most important signal of all. The Central Bank of Iraq has formally addressed the Ministry of Finance regarding the 2026 budget. The official exchange rate to be adopted is set at 1,300 Iraqi dinars per US dollar, a rate that has been in effect since February 2023. But here is what most people miss. The central bank will purchase dollars from the Ministry of Finance at 1,300, sell them to banks at 1,310, and banks will offer them at 1,320 to traders and for external transfer operations. This is not just a number. It is the official framework. It is the baseline from which everything else will move. And it tells us that the central bank is not guessing. It is planning. Now, let me give you the reality on the ground today. While the official rate is fixed, the parallel market tells a different story. The Iraqi dinar has been on a 2-month roller coaster following a tightening of procedures for international transfers. The currency has been trading at up to 1,600 to the dollar on local markets, before settling at about 1,570 dinars. This gap between 1,320 and 1,570 is the source of enormous pain for ordinary Iraqis. Saad Altai, a retiree who helps his son run a small shop in Baghdad's Karada district, described it as a real problem when the dollar was valued at 1,470. His pension was worth $336. Today, at 1,570 dinars, his pension is worth just $314. This is real. This is painful. This is the human cost of the transition. But it is also temporary. The central bank has described the currency fluctuation as a temporary situation, and the authorities have taken measures seeking to stabilize the exchange rate. These have included facilitating dollar trade in the private sector through Iraqi banks and opening foreign exchange outlets at state-owned banks for those wishing to travel abroad. More importantly, the cabinet has decided to oblige all state bodies to sell goods and services in Iraq in dinars at the central bank's exchange rate of 1,320 to the dollar. Muzaffar Saleh, a financial advisor to the Prime Minister, argued that these measures are important as they show that the state is there to protect the market and citizens. Now, let me take you inside the banking signals that are intensifying right now. On February 5th, Governor Alaq met with U.S. Chargé d'Affaires Joshua Harris in Baghdad. They discussed dollar sales, banking reforms, and ongoing cooperation aimed at strengthening Iraq's financial and monetary stability. Harris affirmed the United States' eagerness to strengthen its relations with Iraq and support everything that would consolidate stability. He relayed his country's full readiness to continue supporting the efforts of the Central Bank of Iraq, enabling it to achieve its goals in enhancing financial and monetary stability. This is not boilerplate. This is the United States Treasury and Federal Reserve signaling that Iraq's banking reforms have reached an acceptable level of compliance. The electronic platform for dollar transfers, which now reviews every request before it reaches the Fed, has been a game changer. Since this mechanism was adopted, the U.S. Federal Reserve has blocked about 80% of transfer requests to Iraqi banks due to doubts over the final destination of these transfers. 80%. That is not the United States weaponizing the dollar against Iraq. That is the United States finally enforcing long-standing anti-money laundering and counterterrorism financing provisions that previous Iraqi governments were too weak, too corrupt, or too complicit to enforce themselves. Economist Ahmed Tabakali put it plainly: contrary to current misconceptions, rumors, and misinformation, there is no evidence of U.S. pressure on Iraq. The new regulations require high levels of disclosure and transparency. This came as a shock for many of our banks, who were not used to this. Sudanese government is not fighting the new regulations, it is embracing them. It is using them as cover to do what previous governments lacked the political capital to do: clean up the banking sector, force compliance with international standards, and starve the parallel economy of the dollars that sustained it. Now, let me give you another signal that the banking sector is transforming. On February 9th, Prime Minister Masroor Barzani of the Kurdistan region met with Governor Alaq and representatives of several Iraqi and Kurdistan region banks, as well as e-wallet service providers. They discussed advancing banking reforms and digital financial services, focusing on the My Account and e-Psûle projects, which aim to modernize financial transactions and expand digital payment systems. Governor Alaq praised the Prime Minister's vision for banking reform and the digitalization of public services, reaffirming the central bank's full readiness to continue coordination and cooperation with relevant KRG institutions. This matters because e-Psûle is not just another government website. It is a unified digital platform developed by the KRG to modernize government payments and services. It allows citizens to pay government bills electronically through banks and digital wallets, reducing reliance on cash and in-person transactions. Officials have described it as a key pillar of the Kurdistan region's broader digital transformation agenda, aimed at improving service delivery, strengthening financial oversight, and supporting a more transparent and citizen-centered governance system. Governor Alaq was explicit about why this matters. He said, "Everyone now understands that handling transactions with cash alongside complex economic demands is no longer sustainable. Establishing a secure and transparent electronic financial system is essential to restoring citizens' confidence in the banking sector." Confidence. That is the word. The entire reform agenda is aimed at one thing: restoring confidence in the banking sector, in the currency, in the system itself. Alaq further emphasized that the project represents a model for improving collaboration between the public and private sectors while adapting to global financial transformations. He said, "We fully support all initiatives implemented in the Kurdistan region. Electronic payments are not just an option, they are a necessity for increasing transparency and financial capacity across the country." Now, let me address the signals that are intensifying on the regulatory front. On February 7, the Iraqi Private Banks League hosted a dialogue session to discuss the latest developments in Iraq's banking sector, including issues facing restricted banks and fines imposed by the central bank. Governor Alaq attended, along with representatives from banks and electronic payment companies. Wadi Al-Handel, chairman of the league, noted that a special committee had urged support for restricted banks and called for suspending fines against them. He explained that these banks complied daily with global financial requirements, but continued to face daily fines, urging the central bank to review and halt these penalties. Governor Alaq addressed the central bank's measures concerning banks restricted from using the US dollar, expressing optimism regarding discussions with US counterparts on this issue. But here is the most important signal from that meeting. Alaq confirmed that the central bank supports the establishment of digital banks, revealing that 75 applications have been submitted, contributing to accelerating the digital transformation of the banking sector in Iraq. However, in the initial phase, only 1 or 2 licenses will be granted as a pilot program to assess potential challenges and problems facing these digital banks. 75 applications. That is not a niche experiment. That is a movement. The private sector is betting on Iraq's digital future. They are seeing the same signals you are seeing. Alaq stressed the need for banks to increase financial inclusion by offering modern banking services to a wider segment of society. He underscored that transitioning to a digital economy is a key step in strengthening financial stability and economic development. Now, let me give you the signals from the oil sector, because they are directly connected to the currency. On February 5th, reports emerge that the central bank's decision to process US dollar transfers owed to oil sector contractors by converting them into Iraqi dinars has sparked widespread debate. Economist Nabi al-Marsumi warned that more than 200 Iraqi companies contracted with oil licensing firms, employing over 50,000 Iraqi workers, face the risk of significant financial losses and layoffs. Their contracts and expenses are denominated in dollars, but they are being paid in dinars at the official rate of 1,320, while their costs are priced at the parallel rate of around 1,550. This is painful. This is the transition cost. But energy expert Ahmed Saba noted that the central bank's policy could lead to the gradual exclusion of some foreign companies in favor of local firms or those willing to deal in dinars. He explained that many Western and foreign companies rely on external supply chains that require dollar payments to secure equipment and services. Saba added that the measure may be temporary and subject to change if negative effects emerge on the investment environment. He described it as a transitional regulatory step. Transitional, that is the key word. This is not permanent. This is the system adjusting, rebalancing, preparing for something new. Now, let me give you the political context that frames this entire critical window. On February 8th, analysts pointed to the possibility of the dollar rising to 1,600 dinars during the coming period, amid warnings of regional tensions. Manar al-Obeidi, head of the Iraq al-Mustaqbal Foundation, noted that the rise in the dollar against the dinar is the result of the inability to cover demand for foreign currency for the purpose of import, as well as the decline in remittances of other currencies, specifically the UAE dirham and the Chinese yuan. He predicted that the dinar will continue to decline against the dollar and may reach 1,600 dinars unless problems are addressed by increasing the network of correspondent banks and controlling financial policy by limiting the entry of some types of goods. But here is what the doomsayers miss. Susan Mansur, a member of the Iraqi parliament, criticized the central bank's monetary policies, saying the incorrect policy led to large gaps represented in the growing control of exchange companies and speculative operations. She is right about the problem, but she misses the solution. The solution is not to abandon the reforms. The solution is to complete them. The solution is to push through the pain, to endure the transition, to build the infrastructure that makes the old system impossible. This is the critical window. Not because the rate changed today, not because an announcement was made, but because every single signal from the banking sector is pointing in the same direction. The Federal Reserve is blocking suspect transfers, the banks are consolidating, the digital payment systems are launching, the customs reforms are advancing, the oil sector is being forced to adapt. The political leaders are meeting, the applications for digital banks are flooding in. This is not chaos. This is transformation. This is the old Iraq dying and the new Iraq being born. Governor Alaq was asked about the money supply outside banks. He revealed that more than 80% of the currency circulates outside the banking system, primarily linked to tax evasion and non-disclosure of revenue. But he also said something that should give you hope. If money owners feel reassured about the existence of a fair and transparent tax system, they will bring their money and deposit it in banks. Reassurance. That is what this entire critical window is about. The banking signals are intensifying because the system is finally becoming worthy of reassurance. The digital platforms are launching because the system is finally ready for transparency. The Federal Reserve is cooperating because the system is finally compliant. When that reassurance takes hold, when the shadow economy begins to trust the formal economy, the 80% will start flowing into banks. That inflow of deposits will expand the lending capacity of the banking system. That expanded lending will fuel investment and consumption. That investment and consumption will drive economic growth. and that economic growth will be the fundamental foundation for a stronger currency. The window is open. The signals are intensifying. The transition is painful, but it is also purposeful. The question is whether you will recognize this moment for what it is, the critical window when everything changes.